Money FM 89.3. Best of breakfast. The Bigger Picture, only on Money FM 89.3.
Good morning. Welcome to The Bigger Picture. And looking ahead to the week, we've got a couple of things to watch out for, including what's happening in Japan. And that's after the weekend's upper house elections, where the ruling coalition suffered a historical defeat, which sets the stage for political uncertainty. And also, of course, we've got lots to watch out for with the rest of the markets when it comes to the tariff talk, and also where investors should be parking their money in this backdrop. And helping us out this morning, Vasu Menon. He's the Managing Director for Investment Strategy for OCBC Bank. Vasu, good morning. How was your weekend?
Good morning, Ryan. Weekend was good, very busy as usual with two very young kids. You've got a young kid yourself.
Yeah, it's going to be a busy few years for us. All right, let's talk about what's been playing out on the weekend, a busy one, like you pointed out. And we had upper house elections in Japan. So by and large, it was not the result the ruling coalition wanted. So it looks like they've lost some support and they need to reach over to the opposition for some help in order to keep things going. Walk us through the main takeaways from the results.
Well, as you mentioned at the onset of the interview that, this is a historic defeat for the LDP. Basically, it comes after the setback in the lower house defeat in October last year. And if the LDP continues to govern Japan, this will be the first time that, it's got minority control in both houses of parliament, first time since 1955. And a lot hinges, as you said, depends on, whether they're able to strike deals with the opposition parties. And from the looks of it, Japan's main opposition leader, Yoshiko Noda, from the Constitution Democratic Party, has ruled out any form of alliance with the LDP. And in fact, he's talking about, submitting a no-confidence motion against Ishiba. So a lot hinges on what happens in the next few days. Historically, if you look at Japan, every time a prime minister loses the upper house elections, he tends to leave office in a couple of months. So it remains to be seen whether Ishiba will continue to remain in power. So there's going to be political uncertainty in Japan. But I'm not sure whether the LDP will lose power totally. I mean, Ishiba may have to step down. Somebody else may step up because the opposition in Japan is highly fragmented, split between a dozen parties, too fractured to basically pose any serious threat to the LDP at this juncture, even if they bring a no-confidence motion to Parliament. So it looks like, it still will be LDP rule because they still have the biggest share of votes in the upper house and lower house. They'll continue to govern Japan, but calls into question as to whether they'll be able to continue with their current policies and whether they'll be effective in terms of, dealing with Trump on the other side. Because Trump is going to look at Ishiba and say, look, you're a weaker candidate. He's going to push him harder now. So all that will cast, a lot of political uncertainty, policy uncertainty as far as Japan is concerned. It's going to weigh on the stock market. It's possibly going to weigh on the currency as well. And it may send Japanese bond yields higher too because, what the opposition parties talked about and warned in terms of votes in this election was, a cut in sales tax and greater fiscal stimulus in Japan. All that means, more Japanese government debt.
I pointed out it's going to be a minority ruling coalition of sorts. They need opposition support to continue to govern. So you might see some concessions being struck, and that could lead to what we've been seeing in the past few weeks. The yen under pressure, bond yields going up, but in the immediate reaction in the markets, it seems like the yen went up. How much is that due to it being a safe haven currency? How much was it due to the weekend results?
I think it's because of the safe haven appeal of Japanese currency, because this is going to cast a lot of political uncertainty in Japan, maybe you can say to some extent globally, although it's not as significant globally. So it did lead to a slight bump up in the yen. The yen went from above 148 against the US dollar to below 148, but it's now back up again, to 148.36 or so when I last looked at it. So you're not seeing any big moves in the yen. If you look at how the yen has performed so far this year, the start of the year is 157 against the US dollar. It went down to, a high of 140 against the US dollar in late April. And after Trump announced his tariffs, Liberation Day, the yen weakened again from 140 to now 148.36. And not just the tariffs, but this political uncertainty in Japan as far as, Ishiba is concerned, is also weighing on the yen. So I'm skeptical as to whether the yen will continue to be appeal for investors as a safe haven currency. You might have seen a slight bump up. But as I said, there is political uncertainty, but it is not going to lead to the LDP losing power in Japan because the opposition is just too fragmented at this juncture to put together a coalition that can, challenge the LDP. So it will still be LDP LDP rule, they'll probably strike some deals with the opposition parties, but it will be a weak government that's ruling Japan for quite a while.
All right, let's talk about the markets in terms of equities. What is going to be outlook for Japan when you look at what's been playing out? It has been doing pretty okay in the past year or so, but now with this additional backdrop of uncertainty and also the trade deal, where are things going from here?
Well, I think it's just going to tread water. I mean, you look at how the Japanese stock market has performed year to date. Let me just give you some numbers. The MSCI Japan Index, which is what a lot of fund managers look at, in Japanese currency terms, is flat. Year to date, it's flat, 0.32%. Now, in US dollar terms, it's up 6.2%. And that's only because, the yen has strengthened against the US dollar year to date. Now, how does that compare with the rest of the world? If you look at MSCI global equities, it's up 10%. 10% versus the Japanese stock market in yen terms flat. So that's a big underperformance. Now, relative to the US stock market is up 7.2% in US dollar terms, and the EU, even in euro terms, has gone up by 7.5%, and US dollar terms is up 21%. So the Japanese stock market is underperforming, and I suspect that it will stay this way for now. It will not fall off the cliff. It will stay this way for now, treading water, trading sideways, until we get some clarity about, what the government is going to be able to do next, and BOJ policy. Japan is facing, unlike the rest of the world, higher inflation and the risk of higher interest rates. Everywhere else in the world, we're talking about cutting interest rates. In Japan, we're talking about an increase in interest rates. And bond yields in Japan have gone up quite significantly in the last 1 year, almost double, from 1.5% to 3%, more than 3% right now. So all those are headwinds for the Japanese equity markets. But of course, the underlying corporate reform fundamentals are there. That's positive for Japan. But, some of these macro headwinds you talked about are going to weigh on the stock market relative to other markets, which look in relative terms more appealing.
All right, headwinds for Japan. Just to wrap things up quickly, Vasu, where do you like then, if not Japan?
Well, we are positive on European equities. European equities have done very well this year. We think the valuations are not expensive. Europe has now just announced more aggressive fiscal stimulus. When I mean aggressive, significantly aggressive, 5% of GDP on defense spending and also infrastructure spending. So we like Europe, and we think that European stock markets have more upside potential given, the preparedness of the ECB to cut rates, as well as, the government in Europe to increase government spending. The other area we like is Asia ex Japan, but not all of Asia ex Japan. Within Asia ex Japan, the markets we like are China, Hong Kong, and Singapore. And the Chinese stock market, I know there are macro headwinds, but China has a very strong balance sheet. It's not unleashed all its stimulus. You could see more fireworks in the coming 6, 9, 12 months, and that will provide support for the Chinese equity market. We also like Singapore. Singapore stock market has done very well, and we think there's more upside because yields here are attractive and relative to deposit rates. So those are some of the markets and regions that we like, Ryan.
Yeah, nice wrap up of where to look at right now in this current backdrop of uncertainty. And we've been in conversation with Vasu Menon. He's the Managing Director for Investment Strategy for OCBC Bank. Vasu, thank you so much for your time and have a great week in advance.
Thank you, Ryan, and thank you for having me on the show, and a great week as well.
All right, catch you again soon. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.